Is today a bearish market? I have no idea. I don't use bearish or bullish to determine the day. We'll talk about that if you want. I can answer that in a little more detail at the bottom of the hour. But the whole idea of bullish or bearish is a bias. And the first thing you want to learn to do as a trader in the futures is not have bias. So Roman, but don't we need to make an assumption of strength in the market? Why would we need to do that? We don't trade strength in the market. Remember, I put this up in my introduction session. These are the criteria that I use to make trading decisions. Do you see, is today bearish or is bullish on this list? It's not. Again, what you're probably doing here is what I kind of admonished everyone not to do in the first session, which is bring some thing you think you know to the class, because it's probably wrong. Most people have a lot of misconceptions. And, there's a lot of people that say, oh, you have to decide if you should be trading short or long. No, that's missing the entire point. You go with whatever's happening right now, and it changes a lot. I was long a while ago. I was short at the open. Then I was long at the open, rode it up. Then I shorted again when we got up to 50 area in NQ. And, bullish or bias is not in that equation. I don't want to be swept out, but that has nothing to do with whether the market is bullish or bearish. Nothing whatsoever. Sweeps are a form of price discovery. And yes, those are on my list. And if the market's sweepy back and forth, it indicates that there's energy in both directions and you need to be careful. It has nothing to do with bullish or bearishness. That's one of the reasons I mentioned that I look at the internals, and this is the internals right now. The VIX is opened weak and, risk off, and then immediately turned and the market went up. That's the plot over here. So, up until the last couple of minutes, it was a good long, and then there was a nice high volume reversal short. The market gapped down in terms of advanced decline. NQ immediately got bought. The broader market getting nibbled, but it's not even back to zero yet. So there's no way you could say that this is bullish or bearish. It is what it is right now. There's just absolutely nothing in that question or the answer to it that's useful to trade futures. It's literally completely irrelevant. And you could look another way. Here's the price action, and we had gap down in everything except YM. It opened roughly flat. This is NQ here. It gapped down and immediately got bought and got almost to SD3 of the volume. That's the standard deviation number 3 of the VWAP. If you look at ES, kind of did the same thing. Gap down, got bought immediately. As I said, YM, the one here on the second from the right, opened flat. And RTY opened gap down and hasn't even gotten into the gap yet. So you can call this whatever you want, bullish, bearish, moose-ish, rattlesnake-ish. It is what it is. It's the price action. Characterizing it with one word like that is not only is it not useful, but it's counter-useful. It's the opposite of useful. It's distracting. Okay, let's see. Again, I'm going to give everybody a little more time to roll on in, and then we'll get going. Today, we're going to kind of just tour the features that I use in Jigsaw and what they're showing us. And then we'll go into a little bit about some of the stuff I don't use, but I think I'm going to reserve most of that to the next session this week after we go through the components. So we'll probably be in a good position to look at the kind of other tools and how you might use them probably by Tuesday, maybe before that. Tuesday's our third session. So, all right. See, we are right on time now. It is the bottom of the hour. So let's get busy. When I mention a gap down, is that versus the opening of the Globex? That's a really good question. And in this case, no, it's not. The gap down that I measure is from the previous close. A gap in the overnight, and this is a really good question, Alfredo, doesn't really mean anything because the overnight doesn't really encompass everything anyway. So this is the gap from the close of, in this case, Friday. So that's what I'm looking at. And it's also important to understand that's what you're seeing, for example, on the market analyzer here or whatever platform you run, the change today from yesterday or from previous session, that's not from the Globex. That's always from the previous day, full day, regular trading hours settlement. So good question. Very good question. And today it's interesting. We're not well correlated. YM is almost perfectly flat and opened that way. RTY is gap down and has not really gotten back into the gap. It's down 0.5%. And NQ has been up almost 1%. And right now it's up 0.75%. And ES, up a tiny bit, also filled its gap pretty aggressively though. So both of those are worth noting. Those are points worth noting. All righty. Let's see. I think everybody's pretty much drifting in now. So again, we're just doing open Q&A right now. Any questions anyone has from either the session we did on Saturday or anything that in any of the tick maker material, all of those are legitimate. Hang on one second. I just need to reconfigure my fan here. We're in the middle of a heat wave in Washington State where I am. And running fans to blow some hot air out so I don't have to run the air conditioner yet. All right. So anyway, a bunch of good questions. And again, if you have others, please stick them in the chat and I will endeavor to answer them as quickly as I can. I want to make one point, kind of logistics admin point. I assume that every time we do a session, I assume you are caught up. In other words, you've done whatever homework we have. You were either at the last session or you watched the recording of it. If that's not true, you're going to fall behind really fast. So one thing you should always make sure of is that you're caught up. And the worst thing you can do in this class is not keep up and not watch the recording if you missed the opening session. So I want to emphasize that first. Second thing I want to emphasize is I mentioned a book, Thinking in Bets, in the stream, in the pit, and I also mentioned some previous videos, particularly the ones about risk management. And again, we talked about this in the opening session. If you haven't watched that stuff and looked at the book, you really want to do that. That's, again, going to be really important toward the end of this week and certainly next week when we start going into detail. Microphone shrieking. Is anybody else having that issue?
Nope. Audio is totally fine for me. Very clear.
Okay, yeah. That's probably at your end. Okay, cool. Thanks for all the feedback. Sometimes if you just log out and log back in, or if you just turn your sound off and back on, or maybe you're getting some crosstalk. Yeah, rejoining is probably the first thing I would try. So again, we'll wait just a couple of minutes here. People are still trickling in, and a couple of people are having technical issues. So again, we're in open Q&A, which I will always do at the beginning of a session. So you can ask anything that's on your mind from the previous session, like I said, or from any homework assignment. So that is where we are right now. And we'll let Roman
Larry,
back.
would you please rename yourself or tell me who we know you as in the pit? Because I can't find anybody named Larry who is on this course. So please let me know and I can fix that for you.
Yep, that's always the case. Once we know who you are, it's easier, but
yep.
Every now and then when we do a public class, somebody will share the links with their friends. And so we're not accusing you of that. We just want to make sure that that doesn't happen and we take steps to prevent it.
Okay,
so.
He sent it. Cool.
All right,
appreciate
awesome.
it. Yeah, we have a lot of people who share their Zoom accounts between family members and stuff like that. So the name switches around and, it happens.
Yeah. Yeah. And sometimes that's pretty funny too, Yeah. When it's somebody's wife or their kid, we get some pretty interesting names. Okay, sound is good for Roman. We're good now. All right, awesome. So let's get started. If you recall, when we got together on Saturday, we didn't have any data flowing, so it was kind of hard to really look at anything that was going on. And obviously, that's not the case now. So this is kind of a perfect time to do a quick tour of the current configuration of Jigsaw that I use and what I do with it, because this is the view you're going to see most of the time. And when we get going and we do some trading, and again, if I see a good trade, I will do it. But right now we're kind of in the middle, which is not a good spot. But when I am trading, you will often see some other things up. I have some little, hang on a second, let me get to them. I have some little tiny ninja charts here that I use for looking at the range. And Zoom's interfering with my mouse here. Okay, there we go. And I've got all this minimized for the purposes of our today because it's not really all that relevant, but I will talk more about this stuff. So I just want you to understand that when I'm trading, that you will see these two other things on the screen, a summary of the internals, and I talked about that a little bit on Saturday as well. And then these linear regression views on a very, very fast, these are 5-second charts. And again, I'll come back to all that, but that is not what we're going to do today. So I'm just kind of moving it out of the way. The stuff you see on the screen, with the exception of just this little market analyzer, that's Ninja. And this is a quote board from Sierra Chart that I've got the daily, and in this case, that's the Globex range. And this is the change from the last close. And again, that's just to see correlation, and this is just to see how big the ranges are. And right now, we've got a decent range going in NQ. You know, it's over 200 points, and that's a very opportune-rich environment when you have a lot of range. So over in the lower left-hand corner, you can see this is the economic releases. This is built into Jigsaw, and you can see what's coming up and if it's anything important. And there's nothing going on in the USA markets, although right now we're just getting the bill auction, and sometimes that pushes around the S&P, but you can see things are kind of ranked as red light, you know, really important, green, less important. And so I always keep an eye on that. And I don't care what the news numbers are. I just want to be reminded that they're coming. I generally won't get aggressive or into a trade before any significant numbers, but I like to very, very aggressively trade the reactions to those things. And you will see some examples of that this week. I'm going to try to add a extra freebie session for you guys on Wednesday when we get the FOMC minutes. I'm just, before I post that, I just need to clarify that I can do it that time, and I have a couple personal things I need to move. So anyway, let's go into the Jigsaw components you're looking at, and we'll go from there. So once again, as I mentioned, let me turn on the spotlight thing on my mouse. It makes it a little bit easier to see. That's about the only thing I can do at my end. You guys can make it a little bigger at your end. Okay. So on the right here, the very far right is the depth and sales, or the DOM. Jigsaw calls it the depth and sales because we're seeing both of those things. This one's for RTY. And again, I'm going to kind of introduce it first, and then I'll tell you what all the little things on each one are. But anyway, on the far right, RTY, just to the left of that, YM, to the left of that, ES. This is the liquidity heat map for ES. You can see on all of these views on the right, these three on the right, and this one on here, which I'll explain in a minute. The liquidity is the kind of gray numbers here. And the reason I don't put a lot of emphasis on that, and I kind of have it grayed out, I still want to see it, but remember, anything in the order book, contrary to people's silly posts on Twitter, doesn't really mean that much. The order book means it's enough that we want to keep an eye on it, but it's what people say they are going to do. So for example, if you look at up here at 6 in ES, there's 194, now 193 contracts offered up there. And that doesn't mean they're going to trade. That doesn't mean, oh, if we get up there, the market's going to get sold. It doesn't mean anything like that. It just means somebody's putting some size up there. And those things can act like magnets, big chunks of size, but this one's too far away to be significant. The more important ones are closer to the inside bid and ask. And what the liquidity heat map does is it paints areas with more liquidity as whiter And the darker ones are areas that are much thinner. So you can see there's liquidity here and here. In here, there's a lot of it. In the inside bid and ask, it's a little thin right now, but it's trading there. And then you can see there's more liquidity down here in the form of buyers. These are people looking to sell on the right. These are people looking to buy down here below us. So again, that doesn't necessarily mean that that's what's going to happen when we get there. If you remember from Saturday, one of the things that I watched that's really important, and I'll bring this sheet back up real fast just to show you that. One of the things I want to see is, where is the nearby large liquidity? Well, I just showed you where it was. But more importantly, when we get there, does it trade or not? Do those guys move out of the way, or do they reassert it? And if you watch over here on NQ, you can see somebody's moving a really large block of orders back and forth between 30 and 31 right now. And that's what it looks like. It'll go white, then it'll go green, then now he's down on 30 again. And that's really common. I'll notice that stuff. That's important. But other than that, a lot of people that really don't understand how the markets work put way too much emphasis on liquidity. A really good example of that is stuff like iceberg detectors or, nonsense like that. There is an iceberg detector in Jigsaw. Peter had to put it in because everybody asked for it. But, the interesting thing is nobody really uses it. And no large, significant, profitable traders use it, because you can see it in the tape. You can see it in the traded volume if somebody's an iceberg. In other words, they're continually refilling an order and reasserting, like on the bid or the ask. That's what an iceberg is by definition. And you know what? Who cares? What's more important is whether we're above or below that, and how the price action's reacting to it. So again, I'm going to not only try to explain the Jigsaw pieces and the different tools and what they do, but I'm going to kind of try to give you some insight into where they're useful. Now, right now, you're seeing these blue circles and these blue and red circles on the liquidity heat maps. Those are areas of significant volume, and I can filter how much I want to see there, but that's not the order book. That's traded volume. Those are orders that have already been processed, and that person is in or out of a position. And if it's bluer, that means it's trading on the ask. If it's redder, it's trading on the bid. And again, what we just saw here is absorption of the buyers. It came up to this spot, and the sellers said, we'll take every single one you want to give us. And we traded back below that spot in both ES and NQ. That's called absorption, and that's what it looks like. Somebody's buying and somebody is happily selling every contract they want to them. That's what we're seeing. Now, whether we're above or below there is really important, but that's getting ahead of ourselves. So we'll come back to that. Again, I'm just kind of introducing what you're seeing on the screen and how it's useful. I'll also try to point out anything that you can only do in Jigsaw. For example, you can make a liquidity heat map in Sierra Chart. There's some good templates out there for it. You can spend way too much money and get it from Bookmap. But the basic pieces I want to see here, and that's why I've got these liquidity heat maps minimized to this tiny bit of information. All I want to see is, where is the big liquidity? And I can even make that even more obvious, again, just by adjusting how much depth I'm looking for. And so, for example, a second here. If I do this, you'll see all of the green disappears, and I only see areas where there's liquidity. Some people like to look at it that way because it's much more obvious. And there's nothing wrong with that. In fact, just for now, I'll leave it that way so you guys can kind of see the difference. And the line is, everything to the left of the line is history, and then just to the right of the line is what's actually happening right now. And you can see it trading back and forth. That is one advantage of making it darker, is you can see the action right on the inside bid and ask more clearly. And again, this is one of those things that's just user preference. And I've used it both ways, and in different conditions, I like it both ways. So again, I'm trying to show you examples of that. Okay, what are my settings for displaying the red, blue circles, and do they change over time? Yes, those are the same way I can tune the liquidity, I can tune the circles. See Circle Tuner? So I could make it so that I see circles everywhere like that. And I can also make it so that I only see the absolute biggest ones, which is more like that. And again, there's no magic settings. I generally tune it a little bit to what I want to see, the way that it works, and this is really important to understand, Steve, is that it's constantly adapting to the current volume. So the way I have it set right now is on 3, for example, in ES, and it's showing exactly what I want to see. It's only showing the circles as high volume areas in a couple of spots because that's what I'm looking for. I don't want to know every area where there's volume. I can see that on the traded volume that's printing. So what's cool about it is like at the open, you'll see a lot of circles, but then a setting of 2 or 3 will be less sensitive than it was right before the open. It's adaptive. So in general, I leave that on 3 and it works pretty good for me. But again, in really volatile markets or when the volume really picks up suddenly for some reason, economic announcement or whatever, sometimes I'll change them a little bit. And again, I'm going to share all of my templates for everything, as I said, Saturday, and all the settings and all that for all the platforms I use. That's Sierra, Thinkorswim, Jigsaw, and NinjaTrader. I'm going to share all of that, but I'm not going to do it until the Saturday at the end of class because I don't want you guys screwing around with platforms instead of watching and listening to me explain to you what we're doing and what's important. Okay, so anyway, I told you what these 3 domes over here were in this liquidity heat map. The one in the middle is crunched NQ, as we call it. And what that means is it's not the tick by tick view of NQ. I've got it crunched together, so I'm seeing it a point at a time. In other words, 4 ticks per level. And the one right over here, just to the left of that, is tick by tick. And the reason I do that is because it summarizes the day much better for me. I can see this high volume node, for example, right around 0. And to get to that down here, it's all the way down here. I got to scroll down to it. And yeah, there sure it is, but it's real stretched out. So it's just not nearly as obvious. So I run 2 of those. I run one that's NQ tick by tick, quarter at a time. And I run one that's NQ point at a time. And that's crunched 4 ticks to 1. So we're only seeing 40, 41, 42 instead of 40, 40 and a quarter, 40 and a half, et cetera. It's just combining it together. And for example, it helps me see the emphasis of all this liquidity up here at 50. If I just had to go look at that, and I do not have liquidity on these 3 over here, it's only on the 4 to the right. I'll explain that in another minute. So that's what these 4 domes to the right are. Again, RTY, YM, ES with their liquidity. This is the ES liquidity auction vista heat map showing me where there's large orders and where there aren't. And then this one is crunched NQ and a liquidity map of crunched NQ. There's one other thing that's on these down at the bottom. And this is something that, again, you can duplicate this. It's built into Jigsaw. It's called a flip chart in Jigsaw. And what that is, there's something called stacking and pulling. And later on, I'm going to show you what a default Jigsaw depth of market and sales dome looks like with that at every price level, because you can have that column if you want. And it will show at any given second, not only that there's 130 contracts here at 975, but it'll show how it's changing. Like it just went to 129. So the stacking and pulling column there would say -1. And that's great. But the problem with that, and I mentioned this again in the first session, is to see that at every price level, it's really hard to figure out what's actually going on. Are people net? Are they adding to the buy side or the sell side? And that's what you really want to know. So what the flip chart does is it nets that out for some number of levels. And at the moment, just bring up the settings. I'll show you where that is. Under Auction Vista Heat Map, there is something called the flip. And right now I'm using 5 snapshot levels. So basically what I'm doing is I'm looking from the inside bid and ask where we're trading right now, up 5 levels and down 5 levels. And it's looking at all the people either adding or subtracting from their bids, or adding or subtracting from their offers, the ask, and the net of it is this little line, whether it's red or blue. If it's red, the net is more people are on the sell side. In other words, they're adding sell orders and they're pulling buy orders than the other way around. If it's blue, it means more people are on the buy side and the people that are offering are lifting up and getting out of the way. So it's a good, very short-term tool to determine And again, listen really carefully to this. Don't play around with your platform. It's showing you how the order book is changing right now. Look at it. It suddenly turned big blue, meaning all the people on the offer here moved up and got out of the way, and the people on the bid are pushing the bid up. And you can see that in the traded volume. Right now, we're seeing a little absorption right here, but the order book is still we're likely to blow through this level when that's happening. We just did by a tick there. We may not do it by a lot, but when it's blue, it means more people are more aggressively buying, and the people offering to sell are probably lifting the ask. That's what it means. And that's a powerful piece of information when you trade ledge breaks, which is one of the absolute best things to do in the futures market, either going with them or fading them or doing both. Okay, let's see. I see a question. Red color push price down and blue. Well, it's not that simple. Again, it doesn't affect the price, Roman. This is a summary of the order book. Okay, so these are people, what they say they're doing. Sellers are moving out of the way when it's red, sellers are getting more aggressive and buyers are getting out of the way when it's red, and buyers are being more aggressive and sellers are moving up when it's blue. But it is not a buy or sell signal. Again, nothing we're going to talk about are buy or sell signals. They are pieces of information that can help you make a good decision about what's going on and how it might change. Remember, as a scalper, that's all we need to know. You asked me earlier about, is the market bullish or bearish? Who cares? What we're concerned with is what's happening right now. Remember, that's the number one thing after the time of day. Which way is it going right fracking now? And how is the momentum and the aggression changing? And then the liquidity, as I said, is a big piece of that, because that tells you if it's aggressively moving up into a lot of selling, or if it's aggressively moving up and the sellers are saying, heck, we can get out of the way and get higher prices further up. That's what it's telling you. Okay, I'm getting there, Bob, in just a moment. The left side, I haven't explained the left side domes yet. So anyway, all four of these right side domes that have the liquidity on them, these are representative of my cash accounts. And what I mean by that is real money in an account that, in this case, I have it connected with Rhythmic and also with CQG. There's two different accounts from two different brokers, and that's what I can do on those domes. So if I want to trade any of my own money or anything, those are the domes I'm watching. Otherwise, they are helping me understand the big picture. These three domes over here on the left, number one, there's no liquidity on them, just traded volume. And that's just to keep it simple. For example, I can reset them. I can do this with any of them, but often I'll do that. I'll reset these, but I'll keep the traded volume plotting over here so I can see where the inflection points are. But here I can focus on what's happening right now. And the other thing that I'm doing, NQ, again, this NQ is tick by tick. This one's crunched. If I'm going to trade NQ, I'm going to trade it on tick by tick, because the crunch one, you miss too much traded volume if you make it 4 ticks at a time. There's just way too much information between those 4 ticks that matters. So if I'm going to trade it, I trade it over here, but this gives me a good understanding of what I'm looking for. And that's the reason I use slightly different colors for the value areas. In this case, this green is the value area. That's basically where about, pick a number, 69, 70% of the day has landed so far. Here I've got it in blue to just remind me it's crunched. And then these over here are in tan because those are just normal volume profiles. And the tan part is the value area of the volume profile. In all cases, the blue line is the VWAP. And that is, and this is critical important, it's the VWAP for regular trading hours. Since regular trading started at 9:30 Eastern, the VWAP I plot on my domes is that one. And so right now for ES, it's right around 86.5, 86.75. When you see this view here, and the blue line is the VWAP on these, this is the 24-hour Globex. And that's why I'm seeing the gap on here. And so these VWAPs are going to be slightly different because they're everything since the market reopened last night. So right now, that VWAP is actually at 84. And remember, I just said a minute ago, this one's at 85.75. So they can be slightly different. And again, the VWAP isn't something we use to trade anyway. It's just a representation of where value is. The VWAP is the value weighted price, the value weighted average price. And like anything that's an average, it's basically useless, like a moving average. But it is useful in understanding how far we are from volume parity. So that's why I plot these things that you see here. And these are also on my NinjaTrader views. These are standard deviations. The dotted line in white is 1. The kind of orange line is 2. The tan line is 3. And the red one's 4. So this is 1 to 4 standard deviations away from the blue line for the entire 24-hour Globex session. Why is that useful? Because it shows you when the market is extreme. When it's far away from what is the value, it tends to at least try to get the two to come together. And right now what's happening is the VWAP's coming up, but we got, in this case in NQ, we got to between 2 and 3 standard deviations away from that. And we had a really nice little reversal to play short. So it's a way of measuring a degree of extremeness. And in TRG, we do that a variety of ways. As a scalper, I want to see it 2 ways. I want to see an extreme of the volume, and that's what this is. And then the other thing that I mentioned very briefly at the beginning, and I will talk about it in another session in more detail, I also want to see extremes of the short-term price. And for me, that looks like this. And for those, I use linear regression. And that's what these lines represent. They are linear regressions of the price. So at that exact same time that I just showed you that we were at SD 2.5, we were also above the biggest one that I run, which is about 2 hours and change backwards. And it's telling me that was also an extreme of the price. And this is purely a statistical measurement. These aren't the highs or the lows. They aren't Bollinger Band. They're none of the nonsense like that. This is a linear regression of price. Linear regression, if you're not a math geek, is give me the best fit for the data for this period. And that's why the extremes of the best fit are often useful places to pay attention. It doesn't mean you always buy lows and sell highs. Sometimes it will do this and just pull back a little bit and then blast right on through it again. And again, I will explain a lot more about how I use these, but I don't want to get bogged down in it now because I want to stay on what we're doing in the Jigsaw domes. Okay, so getting to the question I was asked a minute ago, why do I have these 3 over here and why are there 2 MNQs? Simple, I can trade 2 different accounts at the same time. That's why. And sometimes I will trade 2 different accounts and I'll use a trade copier. Other times I'll just trade them separately. And there's a lot of good reasons for that. Sometimes I want to go 2 directions at once. Sometimes one of them is kind of a swing position and the other one is a scalp. Sometimes they're in 2 different accounts. I might be short in one, long in another. Although if you're using PAs, don't do that with 2 different PAs. They'll slap you for doing that because you're basically hedging them. So if you're doing an evaluator, you can't do what I just said. But remember, I'm trading in a lot of different accounts at once. So frequently I want to do that. Like, let's just for fun, this could be a little nibble long here. So let's do that in one of my cash accounts and just see if we can catch a quick scalp. And over here, I might want to be short in the same trade. I'm not going to do it right this second, but I could do that if I wanted to. In fact, let's do it. That's showing this one. So let me switch over here to just a test account so I can show you. Okay, so here we'll be short and over here we'll be long. I was a little late with that. But again, I think I could probably catch some ticks here long, and I'm about to do that right now. Pick off a $20 bill on this little bounce, and then maybe we'll catch a little bit of a runner. Meanwhile, the short trade, maybe we'll scale that a little bit. And you can kind of see how I can do that. And this is a pretty advanced tactic that you're seeing now. I've got a runner over here on my long and my short's no good. So we'll flatten the short out and play the long. And we made a little money in the long. So that is why I sometimes do that. That's why I have multiple domes for the same thing. They don't have to be. I can change whatever instrument I want on any of these domes. All you got to do that in Jigsaw is just go to the little symbol search thing here. And right now this is on MNQ. Let's say I want one of them on MES. I don't trade it very often, but I used to. In fact, you know what? I don't even have it on my screen anymore because I haven't been doing it. All right, let's make it ES over there. Let's say we want to trade ES over there, and we'll trade it in our cash account. And we got to get the right time, which is that one. And so just like that, this one becomes ES. And I can connect it whatever account I want. I've got it on the account that I was just short in here. So I could pop that up and I could trade over there in ES. And it would be completely discrete from my MNQ trade here. And I could use MNQ or MES there. I just realized to make this simpler, I only have MNQ running at the moment. So that's why I didn't just grab MES there. I've been avoiding ES and MES because I make much more money in NQ. And here's why. Look at the range of ES today. It's 38 points. Look at the range of NQ. It's 230 points. And as a scalper, the more range, the better. You know, if you can't make money with a 230 point range, you're doing something really wrong because that's just a lot of movements. All you got to do is pick the right places to play. Yes, of course, that's the hard part. But anyway, that was a good question. Okay, let me put this back and then I see another question. So I will answer that one and we will continue. So we want this back on MNQ and let's put this in that account also. And we'll switch to that and boom, now that's MNQ again. Okay, let's see. What is the difference? Okay, I answered that one. Does it make sense to know average volume, the average daily volume of MNQ? No, that's not useful. In fact, the only thing I really watch the volume on is the total volume at the open and during the session for ES. And right now we're at 742,000 contracts. And for this time of day, that's really low. That's classic summer low volume. And you can also see if you look at the ES dome, there's a lot of spots where there's just no liquidity at all. And again, that's really common in the summer. In the fall, you'll see it'll fill in a lot more, and the large chunks of liquidity will be a lot bigger than 200, and you won't see a whole lot of just double-digit little ones like in between. So, good questions. Again, if I answer a question, you have a follow-up question, always just throw it in, and I will come back to you, but I will continue. So that's what's on my domes, or what the domes are. Now, let's talk a little bit about what is on each one. There's a lot of different columns you can set up in Jigsaw. And again, Jigsaw is a great box of tools. And when I first started using it in 2014, I was totally overwhelmed by it because there was just so much going on all the time. And I didn't know what it all meant. And it constantly distracted me. And some of the things I thought that I knew what they meant didn't really mean what I thought they meant. And so I was using them wrong. You know, I thought certain things meant buy here and sell here, and they didn't. It just meant this is what's going on here. And so over the course of the years from 2014 up until about, call it 2018 or so, I played around a lot with the different tools. And this set that you're looking at is the stuff that I use daily. But again, in coming up sessions, I'm going to show you kind of how I got here. And it was very different a long time ago. I used a lot of other tools that are here. For example, I'll show you just one. There's something called a power meter. This right now that I just popped up over here, this is called a power meter. And what it's showing us right now is the traded volume, whether it's on the bid or the ask. And right now, a lot more of it is on the ask than the bid, about 2-to-1. And we pushed down right after that. And what you were seeing was this absorption right here. And so blue means that we're trading into sellers and not going up. But if we get above there, then it's buying. So a power meter can be really useful, particularly a fast one like this. This is summarizing the last 15 seconds of this tape right here. That can help you understand the order flow until you get good enough to read what's happening in the traded volume. I'm really good at reading what's in the traded volume, but I wasn't always. And I used power meters up until just a couple of years ago. And I still recommend them for a lot of new people. And I'm going to go through what the different power meters are and how you can use them. But I'm not going to do all that today. Again, I just wanted to show you a simple example of one. So let me close that. But anyway, we have covered everything that's on my domes except what's in the column. So let's go to that. And we'll use ES over here as an example. So again, as I mentioned a minute ago, the far right column is the volume profile. And that's just like any other volume profile. It shows the amount of contracts total that traded at that price. Whether they trade on the bid or the ask, it doesn't care. It just totals them. Now, that's one advantage if you're in Sierra Chart or other platforms. You can split your volume profiles up and show the trading on the bid and the ask at each price. And that's very powerful. And I do that in Sierra Chart. Here's an example of it. Here's the volume profile for the regular trading hours right here. But you can see it's showing how much was on the bid and how much was on the ask at each level, not just the total volume. So again, that's useful, but as a scalper, it's not critical because of the next column over that I have, which in Jigsaw, this is called total volume. And basically it will accumulate all the trades on the bid, I've got kind of in this pink, and all the trades on the ask, I've got in blue. And it will do that until either the session starts over, and this is going since regular trading hours, since I reset it. And you can reset them anytime you want, though. So for example, I'll show you over here on this RTY one. I can just click that and all that goes away. And it just gives me fresh volume from the moment that I reset it. So the idea of total volume is to give you the bid-ask footprint, but to give you the ability to reset all of it or one side of it or the other. That's what these little arrows do. And that's useful. The next column over, these two, that's called the current volume at the moment. And again, there's slightly different names in Sierra, but you can do this in Sierra as well. And what that's showing is the volume right now. And if a price gets touched again, it resets it and starts over. So it will keep accumulating as long as the price doesn't move. But if we go above this and come back to it, it'll reset it and give me a fresh number there. And that's very, very powerful. Everything in the traded volume is powerful information, but learning, when it might be a good idea to reset it and when you might want to look at it, for the whole session, that's about execution tactics. And that's the kind of stuff we'll talk about in the third week when you guys are just a little bit further along. Okay, let's see. I noticed you're running a Sierra quote board. I mentioned that at the beginning. Who is that? That's Peter. I mentioned that right at the top of the session. That's the only thing I'm running on my main screen from Sierra because I can see the range on it. There's actually a field called the range. NinjaTrader doesn't have a field called for the 24-hour range. So that is literally the only reason that quote board is there. I do run other Sierra things, but I don't have them on any of my monitors in my face, like this 30-minute rotation. The standard market profile rotations. I don't look at all that stuff while I'm trading because for me, that's contextual. And again, the only things I'm concerned with are the price and how it's interacting with the liquidity and what traded volume are we seeing as a result of that. So, for example, if you look at my elements that I use to make decisions, I don't have on there any of that, because it's not part of it, but it is contextual for me. So I will explain that a lot more going further. But yeah, I couldn't, without writing code, I couldn't come up with a range field. So I just grabbed one in Sierra because it already had it. So good questions, great questions. Okay, let's see, Roman. I assume that approximately the same number of traders trade MNQ all the time. No, that is a completely erroneous assumption. Why would you assume that? Again, there's absolutely no reason to even make that statement. That's not true. There are people that trade sometimes MNQ, sometimes MES, based on the conditions of the day, or based on how much risk they want to take, or based on what size PA they're in, or what size cash account they have. MNQ is a lot less per tick than NQ and MES for that matter. So that's just that your assumption is erroneous and incorrect. So no, more volume doesn't mean new people are appearing. It means the total volume of contracts traded is higher. That could be because one large trader traded and we have half the people we had trading earlier. So again, you're just reading that completely wrong. Okay, yes, I know, but just wondering, okay, I answered that one already, Peter. Let me know if you have a follow-up to it. Yeah, okay, I see that. Let's see, uses the same, yeah, okay, Fitzroy, you named it correctly as well. Okay, so that's what's on my screen. Again, quick summary. We have on the far right, the volume profile with the VWAP and the value area. And then we have the total volume since I reset it. And obviously, this isn't the whole day. I reset it right before class, and it's just showing what's been happening up here. And the one to the left of that, the current volume. So the last time we traded 3, we traded 495 contracts on the ask versus 23 on the bid. That's a pretty good example of absorption right there. And just below it, there was a lot more on the bid, but those buyers got nowhere. And again, if you go into a footprint, you would see that same thing. We came up into here and it got sold hard, and now we're further down. And if you look at the bid-ask split here, you can see the same thing. So, and I do on my Sierra charts, I run 2 volume profiles. One's the overnight and one's the regular trading hours. Combined, they're the Globex. So, which is the 24 hours since the reset last night. All right, let's see. What else do we have here? Bob's asking, do I think pros trade in MNQ or MES, or is it mostly retail traders? It's both. I know a lot of very large pros that arbitrage the MNQ and the MES against NQ and NES. Happens a lot. I know in the overnight, a lot of very large traders that trade MNQ instead of NQ. I'm a fairly good sized trader. I do both. So no, I wouldn't say that. I think if you're new, you're much better off learning in the micros and doing what I was doing before that I just showed you. Trade 1, 2 micros at a time. If you're going to trade blocks of them, make them fractions of the mini. So in my case, I use 5, which is half of a mini, and it's just a more discrete way and more granular way to scale in or out of a trade. I don't go, in as aggressively as a 1 NQ would be. And, 1 NQ can get you in trouble really fast if you don't know what you're doing. So, but no, I wouldn't say that at all. I think the institutions and large hedge funds are pretty active in all the instruments. A while ago, a couple of years ago, that wasn't true. And that's why those liquidity providers in the micros were set up by the exchange. I discussed that in the Saturday session. If you don't know what I'm talking about, review the Saturday session. But no, I wouldn't say that it's divided that way at all. In fact, again, let me just tell you guys, this is worth repeating, and keep the questions coming. These are great questions. This is worth repeating what I'm about to say. I said this on Saturday as well, but there's basically 3 major groups that encompass pretty much everything in futures, in equity index futures particularly. There's 3 groups of players. By far, the largest group and the most money are the equity funds. But they're not active traders. They use futures as hedges. If they have a big equity position on, they might take on a counter position in the futures for a fraction of it as a hedge. And that's very common. So when those guys trade, they don't really care too much about ticks. They're putting on pretty good sized positions, and they're by far the most amount of money in equity index futures and in a lot of other contracts, but absolutely in the equity indexes. So that's the equity funds, and they really have nothing to do with us. The way they trade has nothing to do with us. We just have to be aware that that's where the most of the money is and comes from. So when those guys start aggressively hedging, like when the market's moving really fast, then they can have a really big impact. And you often see that if there was big overnight news, because the equities aren't trading, what some of the equity funds will do right before the open is they'll put on hedges against the open in case that energy continues, that they don't have to just liquidate their equities. The second group are aggressive hedge funds. And there's a lot of those that trade the futures, the equity index futures, and almost all the other futures. A lot of those hedge funds are run by former floor traders, or they used to partner with floor traders. And these are the guys you need to worry about because they basically do the same thing we do. They look to make short-term profits on imbalances in the tape or distortions of value, and they're trading a lot of money. I've got a bunch of friends that do this, and the smallest fund of those is running $750 million and routinely trades 100 lots of the different futures, sometimes even more than that. Many of those funds trade as much as 1,000 lot at a time. So they're the people that can really move futures around. And they're the people, again, that basically do what we do, except they're better at it, they're faster at it, They have better computers. They have better mathematicians, and yeah. Then there's us, and we're cannon fodder. We're the ants on the ground. Most of the others aren't really aware we're here. The hedge funds like to push highs and lows to take advantage of retail traders who don't know any better. They like to push the ES more than 2 points at a time for no reason, just by literally buying aggressively, selling to themselves, and pushing the price, because they can create sudden sharp moves that they can then aggressively fade. And that's really profitable for them. So they like to take advantage of us, but we're insignificant. There are a great number of retail traders, but if you add all of us together, we don't account for a fraction of the money or the volume. So again, that's why looking at the volume in MNQ or NQ, Roman, is number one, you're not seeing what you think. It's not new people coming in, and it really has nothing to do with that. There's a little bit of truth to that in the size of the open interest, which is something Lee looks at. But again, the small people wouldn't affect the open interest enough to matter. So anyway, okay, let's go back to some pros might trade spreads with micro. Sebastian, that's what I mean when I say they arbitrage them. They are trading the spreads against the minis, and often against a basket of stocks that comprise the mini. You remember, futures are a derivative of the cash index, which is a derivative of a group of equities. And so here's an example of that right here. This is the NASDAQ 100. And these are the equities. And this index is called the NDX. That's the cash. And the thing we trade, NQ or MNQ, is a derivative of the cash, which is a derivative of all these different equities. So, there's countless arbitrage opportunities. But they're really not trading the spread so much. They're arbitraging is what they're doing, Sebastian. The spreads often aren't big enough to worry about. They are in ES. There's a lot of people that play spreads in ES. A lot of hedge funds do that, where they'll buy and sell looking for, 1 to 3 ticks, and they run algorithms that do that at key liquidity spots, like you can see right here on the ES liquidity heat map. It traded down really aggressively into the liquidity and got bought down there, and the liquidity is actually increasing down there. So we're about to go down there again. And now, see, they just moved out of the way. Look at that. So it's getting grayer. All the white, they just jumped out of the way. So see, it's not going to trade. Those guys were just kind of spoofing that they might want to buy there, or they decided to move their order down a tick or two, and because they can make money on a tick or two. If you're trading 100 lot and you can make 2 ticks, that's a really profitable trade. But for us to execute against that is really hard. We just aren't big enough to do it. So good questions. Okay, is it possible to see those big guys on the dome? What big guys on that? You mean the equity guys, equity indexes? No, because they'll decide. They might be some of this liquidity, like up here. At the moment, let's see, we've got 125 contracts at 275. I have no idea who those are. Those could be equity funds, they could be hedge funds, they could be retail traders. Again, it doesn't matter. What matters is what happens there. You got to drop the idea that the big guys, what they're doing is somehow something you should watch. I see that nonsense all the time. The MMs are doing this and the big guys are shorting here. And that's complete nonsense. That can change in an instant. And you can go above that price and all of a sudden they're run over and we're 10 points higher up. So it just doesn't work like that. There are no big boys who know more than you are. Yes, there are much bigger traders, but the important thing to understand is that their strategies are completely different than yours. So whatever it is they're doing isn't really relevant to you. That's the point, Roman. And that's the real takeaway here. Stop worrying about big guys. I see this in retail guru, furu crap all over Twitter all the time. And, there's the guys that sell the dark pools indicators, which are complete bullshit because futures don't trade in dark pools. Equities do, and they're dark for a reason. They're large players trading with each other that don't want to impact the tape or the order book. So it has absolutely nothing to do with the futures market. But there's one provider out there selling some stupid black box indicator on dark pools, and they charge like $1,000 for it. And then they have all these affiliates posting all over social media how great it is. And if you look it up, those guys are getting 75% of their sales. So, it's just a giant bullshit Ponzi scheme. So be very wary of anything like that with big boys or secrets or dark pools, or it's all nonsense. You remember this from Livermore. Okay, again, Jesse Livermore traded in the 20s and 30s, and there was no information that we have now in terms of the bid and the ask traded volume, Roman. And I'm going to throw something back at you because a lot of your questions, they show a lot of prior reading you've done that, it's good history, but it isn't relevant to what is happening in the market these days. More importantly, I wonder, have you gone through the tick maker courses? Because that would clear up almost all this stuff for you. The only thing that's wrong in the tick maker courses is a couple of the settings that I use for regression are out of date. But have you done those yet, Roman? Because if you haven't, you'd owe it to yourself too. It will make a lot more sense, and you'll realize that the questions you're asking are just not pertinent to what's happening now. Like, I'll give you an example of what I mean. Jesse Livermore, 20s, 30s, 40s, that kind of time frame. So he had a really fast car then, Roman. He had a Model T. Okay, today is a Model T a fast car? No, it's irrelevant. It's a cool car to make a hot rod out of, but it's not a Lamborghini or a Ferrari, right? Do you understand my point? Critical. Yeah, they are a prerequisite for this class. And I did say that on Saturday, that if you don't understand the terminology and what I'm explaining, and if those are the kinds of questions that are still popping up, you really owe it to yourself to review the tick maker stuff. It'll give you the foundation to understand what I'm explaining. But by all means, keep asking questions. Hopefully I can get you on the right path. I don't mind the questions you're asking, but it's important to understand that a lot of them are really out of date kind of thinking. Order flow changed everything. Somebody asked me in one of the live sessions, I've been doing this almost 51 years. It's going into 51 years. And what's changed the most since I started in 1973? And the answer is unequivocally order flow information, being able to see the volume, not just as a total, but whether that volume occurred on the bid or on the ask side of the tape. That is the total game changer to trade. Before that, the only tools we had were volume and technical analysis, and technical analysis looks backwards, and it's useless. It's meaningless. But order flow data tells us what's happening right now in the traded volume, and that's the holy grail. That's the stuff you need to know. I wish I had it years ago. Okay, so there's a couple of other Jigsaw items that are on my screen right now. As I mentioned, the calendar over here, which I've got kind of crunched down, but there's a lot more I could see. And that's really useful, again, just to not be in a really big position if something big and important is coming. And today there's nothing else coming that we really need to worry about. So, but an example of that would be, if it was this time of day on Wednesday, the FOMC minutes would be coming in about an hour and a half, and that would be something I'd really want to remember. So I have that there as a reminder. Now, the one other thing that's Jigsaw on this particular screen is these two tapes on the left of the last dome. Wow, it's getting sold pretty aggressively here. We're in this big low volume node. See how fast, I mentioned this on Saturday. See how fast it moves through a low volume node? Look how quickly that just accelerated down. Really common because it's a low volume node because nobody traded there. All the traders were either here or here. And in the case of ES, here and here. So it will trade into a low volume area very quickly. And that creates an opportunity. And that's why that's one of the things that's on here is high volume and low volume nodes. These are low volume nodes because there's nobody there. And these are high volume nodes because a lot of people played there. And just for that reason alone, they're important to us because they may reassert themselves when we get there. Or if they don't, the high amount of volume still shows that there was a lot of buyers and sellers there. And if we get below or above that point after going through it, a lot of those guys are going to be off sides, and that will create some more momentum in one direction or the other. So that's why those are so important. Okay, so anyway, the last two things here are tapes. On the one on the right, that's just next to the dome here, I'm running literally trade by trade. Every trade that's filling in the NQ. Now, I might be trading MNQ, but I'm only watching a tape of NQ because it's 10 to 1. So, the volume right now is 382,000 in NQ, and in MNQ, whoa, 760,000. Yeah, but divide by 10. So it's still a fraction of what's going on in the NQ. So I don't watch the tape of the MNQ. I do watch the traded volume of it. And that's why I have it right next to my NQ dome, because I can see down here aggressive buying in MNQ, not quite as aggressive, but obviously bought as well in NQ, and we are now well above that area. So that's a really good example of that. So I'm running this one at a time tape, primarily this one right here. Primarily the purpose of that is to see the momentum. Watch how it changes as it gets going. Sometimes it's not moving very fast. Sometimes it'll just go boom, and a whole bunch of trades will go by really, really fast. And that's what I'm looking for. It just helps me see the current momentum. Remember, that's one of the things on my list that matters. And that's right here. How much is the momentum changing, and are we moving with how much momentum? That's the purpose of that. And also important to understand, this is not just time and sales. In Jigsaw and in other sophisticated platforms, but a lot of unsophisticated platforms don't do what I'm about to say. For example, Ninja or Thinkorswim. A reconstructed tape will reconstruct trades that have similar timestamps and potentially order numbers on them. It uses an algorithm the CME provides. And so it's reconstructing orders as they fill the best way it can. So that's why you'll see, clumps of two. Look, see how that just suddenly sped up, and it's getting green and blue, which means we're going up slightly. We're trading into the ask. Here, I'll reset one of these so you can watch that. That's exactly an example of the momentum. The other thing I'm watching there, which I watch on this one, and all I'm doing here is I'm filtering for blocks of 5 or more. It's the exact same thing, except they're filtered for blocks of 5 or more. And what I'm interested in is, again, which side of the tape are they trading on? Like up in here, there was a whole bunch right above the ask, and that was back at 92.5, and we're trading at 96. So literally all the sellers got run over there. It traded into some sellers, and they ran right over it by going above those people. And so all those sell orders got filled, and the buyers were so aggressive that it just kept pushing the ask up. That's what that means. So it often helps you see inflection points. And again, this is a real overview. We're going to see a lot of this in action with real trades, but we're not going to do that today. Purpose of today, and I'm going to try to keep it under an hour and a half with everything. We're at an hour right now. Is I just want to give you the overview of what you're going to see on my screen every day, and for every class. And this is it for Jigsaw. This is what I use. I also have on the other window a little P&L thing running, and I post that in the pit. There's a stream, I've mentioned this before, called In Anything Goes, called Scalping Micros this morning, and I will put whatever trades I'm doing. Whoops. Double clicking, I will put them there, and you'll be able to see what I was doing on any given morning. And I've been posting these here for a couple of years, so there's a whole lot of them. And you're welcome to go through and look. There's some good comments in there as well. But that's over on my other monitor. But that's the only piece of Jigsaw stuff that's not on this main screen. And I don't have it on this main screen because number one, when I'm in a trade, it will pop up for me on the dome. For example, again, let's just throw up this, and I don't know, we'll just pick a direction here. Oh, let me give it a second and let's go with long. And so immediately it shows me the P&L, see? And, that's 5 micros. So let's say I want to try to make $20, that would be to there. And, good absorption right here, but also on the ask. So it's pushing down a little bit. Again, you can see it right there. Okay, now they're hitting the bid pretty hard. So if you were long here, you might want to be too aggressive, but I could be that aggressive and probably still make a little money. So that's an example right there. Okay, so now we can protect that. We couldn't. So I was trying to catch a runner, but so again, quick scalp, and that was, $25 with a 15 lot. It just is an example. But that's it shows me right on the domes. I don't pay that much attention to that. In general, watching your P&L while you're trading overall isn't a good idea, but watching it while you're in a trade, if you're trying to handle something like a trailing drawdown, at one of the evaluators, that can be a little more important. You can see how far offside you're getting pretty quickly. So I do run the P&Ls there. Let's see. I've covered everything again that I use. There's a lot of stuff I don't, and I am going to go into that in a lot of detail. But first, let me pause here and see if anybody has any questions on this. And if not, I might preview a little bit about what we're going to look at next session. Let's see. We covered the three main topics I had for today. So, okay, we're getting some questions. So let's first exhaust the questions. On the dome with ES, there's about a minus 3650 difference red on blue. That's called cumulative delta, and it's irrelevant. Yeah, I can display that. Jigsaw has that. So for example, if I wanted to see that, see this little thing right here, that will put that on my dome. And it's showing me right now that for Globex, it's actually minus 15,000. That's useless because I don't know when that happened. It's the net of 24 hours. Or if you're looking at RTH, like your number of the 3650, again, we don't know when that happened. So why would that matter? And a lot of people talk about, the cumulative delta is really important to determine which side of the market you should be on. Nonsense. Complete and total nonsense. That person does not understand how cumulative delta works. Yes, it's the net difference between the trades on the ask and the trades on the bid for the session or for the Globex session. But I just said the biggest problem with it is we don't know when that difference happened if we're looking at it. And so, divergences in the cumulative delta versus the price, nonsense. By the time that stuff catches up with each other, the price will have moved 20, 30, 50 points. So again, anything like that that's backwards looking isn't very useful, but that's a great question. That's your best question so far, Roman. Give you an award for that one. JVC, can you handle, there's a waiting room person. Yeah, thank you.
Yep, already did.
Got it. All right, so yeah, good one. All right, what other questions do we have about anything we've covered today or anything that we covered Saturday or anything in the Tickmaker courses? If you haven't done the Tickmaker courses, I guarantee you will be lost on Wednesday going forward, and it will just be your fault. And I won't indulge a lot of questions from people that obviously haven't gone through those. We gave them to you as part of the course for a reason. You need to understand the way that the tape works and the right terminology for things. Critical. So, excuse me a second. Still battling my combo flu COVID thing and sucking down cough drops. So excuse an occasional cough. All right. Well, let's do a little bit of something else. I'm going to just show you a little preview of the thing that I do with everything else. I'm going to put my little ninja windows back up, and I'm doing this because I just want you to see what my what we call a point of view, what I'm looking at. And what I use it for. We're not going to spend that much time on this, but the ones I want aren't coming up. Okay, we need RTY and we're missing EF. That should be that one. There we go. Okay, so that's the only kinds of charts I use besides the one I showed you that shows the standard deviations of the volume. And one point I want to make about this, if you don't understand statistics. Remember I said, the VWAP is the blue, this white dotted line is one standard deviation, this is 2, this is 3, this is 4. If you don't understand what that means, just go to this page. There's a page called Math is Fun, and just look at bell-shaped curve, and you'll understand what that means and how extreme it is. Okay, so one standard deviation gives us about 60% of the volume. 2 standard deviations, 95%, 3, 99.7, and 4 is 99.9, not on here. So when I say that that's what we're looking at here, that's why it's useful. We're getting, number 1 isn't very useful. That's normal. Normal is the VWAP and 1 standard deviation in either direction. When you start getting to 2 and even better 3, it starts getting extreme enough that you can consider it to be potentially a fade, because if the VWAP isn't coming up really aggressively and we're up there, and that was the case right here, then it's probably a good little reversal trade. And in fact, that was a really nice one right there. I did that trade. And another example right here just happened in ES. We touched 4503, big fat whole number. It got absorbed up there and boom, it got slammed right back down below SD1. And what did that look like in the price action? That's what I use these for. There's that event in the price action. And what you're seeing on this view, and again, I use Ninja for this. The templates for it, for Sierra Chart, are in the pit. A bunch of people have duplicated it. Basically, what I'm doing is this is a 5-second bar, and the only indicator that's on it, I have something painting the bars, but that's not really relevant. So, when we get to the last day on Saturday, I'll explain that and why that's there, but you really don't need that. What's important here are the regression channels and these little numbers above them. That's a wave volume indicator. That goes back to another very, very old kind of philosophy of the market by Richard Wyckoff. And about the same time as our friend Livermore, Wyckoff, also known as Rollo Tape, looked at the wave volume, the back and forth, looking to see whether buyers or sellers were more aggressive. And that was actually genius. I do the same thing. When I see big breakouts right on the statistical edge of the price range on much bigger volume than I saw down here, I say, that's asymmetric. If I'm short here, I'm either going to be wrong right away, or if I'm right, I can catch a really sharp sudden move, and that's a really profitable little trade. Likewise, right here is a classic Wyckofian setup. Fitzroy, you and I were talking about this a couple of days ago, and I mentioned this in the Saturday session. When you have a sharp move up on heavy volume and it doesn't pull back, it just consolidates. It did this actually twice. Here's one right there. So we had that sharp move up, right? That was the break of the initial balance, really aggressive. 11K, 6K, when these other moves were much lower amounts of volume, right? So what happened right after that? Well, it kind of just consolidated. It really didn't pull back very much. That's setting up something that Wyckoff called a spring, meaning that that's a really good spot if you keep a really short, a really, really tight stop right under it. If you got long in this range and you put a stop right under it mentally or physically, I don't use physical stops, but admit you're wrong if it goes below that recent consolidation, you can often catch another pulse of that. That's called a spring in this case, and a spring will do something like that. And so, you're getting long here and boom, now you got a nice quick long, you exit. As soon as it springs, you protect it and take profits. And we actually got a few of those little springs along the way here. There's a really nice one right there. You get long in there, you put a stop underneath it, and mentally is better than physically, but that depends on your execution skill. And then 9 times out of 10, you'll catch a really aggressive move through that high. That's why it's a spring. And then, you ride it as far as it goes. You take profits as fast as you can because you never know if it's going to pull back or not. So that's called a spring. The opposite of that's called an upthrust. And that's one right here where there's a low volume push up that doesn't take out the recent highs. That's a good spot to fade. And often you can catch a nice push down. So we're going to talk more about those things, springs and upthrusts. But that's why on my little Ninja views, I have the wave volume. The lines, as I mentioned a minute ago, are linear regressions. I'll explain the reason that they are the way they are and what the settings are and all that crap on Saturday, the last session of this class. I'm not going to do it now because I don't want you guys screwing around with it. I want you watching and learning, and then I'll give you the settings and you can go play with it on your own if you want to use that. The breath spring, let's see, hang on, let me back up a little bit. Okay, we answered that one. Jeff, as you've explained all you have, can you go over one more time on the VIX chart? Oh, absolutely. Yeah, that's an internal thing. I'll be happy to do that. The best spring on that chart is the low. You talking about right here? That's not a spring. Where are you talking about? Yes, it is. Okay, here we go with that. Folks, if you want to bring what you think is previous knowledge to the class, that's fine. But the way that I use springs and upthrusts is based on Wyckoff, and more importantly, David Weiss's book. I knew David Weiss, he's no longer alive, on a modern interpretation of Wyckoff. And what you're talking about is an area of distribution accumulation and all those giant big factors in Wyckoff. And Brandon, that is exactly what I am not talking about. So please don't do the, I say something and you say, no, it isn't, or yes, it is. Okay, the type of spring setup that I'm talking about is a very particular one, and it has to do with the price action. You're saying this is a spring setup because of this is a long trend move down. And I get it. I've been there. I know the book. I've read the book. I probably read the book before you were born. Again, I'm not trying to pick on you, but what you're doing is you're taking something that you think you know based on prior education, and it doesn't apply to what I'm saying. Yes, in classic Wyckofian behavior of days and days, not of the price action in 5 seconds, that's a spring. But that's not what we care about. What we're looking at is aggressive moves up like this one that don't pull back on very low volume, and then they continue very aggressively. That is a price action spring. What you're talking about is something over the course of the session or a lot of the price movement down to there, and that has nothing to do with scalping. Okay? So, all right. Did you know David? Because I did. I've had coffee with David. Yes, okay. Cool. Then what we're talking about is the chapter he discusses, and I had this conversation with him, that if there's one tool in Wyckoff that you want to just trade, grab a 5-minute chart and look for the pattern that I just described. And what happened before it is irrelevant. Okay? So for the purposes of this class, that is the definition of a spring and an upthrust. And you can interpret it any way you want, but we're going to leave that there, okay? You're not ruffling my feathers. You're just violating a principle that I brought up in the first session on Saturday, that don't bring prior knowledge to this. It won't apply to what I'm saying. It might apply like, yes, you're correct. That's a spring in classic Wyckofian behavior over the course of the session, which has nothing to do with scalping, okay? That's the problem with that statement. Okay. Let's move on. Didn't mean to pick on you, but again, I don't want people getting confused. In price action, that wasn't a spring that I would pay any attention to. Okay, let's see. I had a question about the internals, and let's do that real quick. I watched 3 sets of internals. I watched the tick, not ticks, but the tick. It is a New York Stock Exchange issued indicator that you can get on any platform for free or for $5. And it's measuring everything in the NYSE broader market that is going up minus everything that's going down. So a positive tick means net we're going up. If it gets above about 1,000, it gets real interesting because that's the most aggressive. You know, sometimes it goes a little higher than that, but that means most stuff is going up. You can see right now it's at plus 400. I do run a cumulative tick, and that just adds all of these together. So I just get a sense of the relative buying and selling aggression. And I also have plots for the high of the session and the low of the session. So we opened on the low tick, minus 800 and change, and it immediately started getting bought. And we saw that in the market. The market opened and pushed down, and that set up a really nice little spot to get long. And, you know, we can see that if you look at the ES, you know, here's where that was. And that whole area down there, you know, we were seeing a lot of negative ticks, but price wasn't dropping. And once it left that area, it did it on higher highs really aggressively, and it just kept consolidating and doing that over and over again. So the scalping opportunities are in these short-term springs in here and pullbacks, not in the overall picture for the session. But that is why I watch that. It gives me a sense of comparing. Remember, the equities are what we're derived from. We're two different derivatives away. Remember, the cash is a derivative of the equities, and we're a derivative of the cash, but it's useful. I do the same thing for the NASDAQ tick, which is $TIKND. Some platforms have a slightly different symbol for that, but it's the same idea. Take the NASDAQ 100, and at any given moment, what's going up, what's going down? Well, right now it's on -1. So basically, they're almost even. Almost everything going up is countered by something going down. And if you look at the heat map, you could see what that actually looks like real fast. And so we've got, NVIDIA and Adobe up really strong, and they're big chunks of it, but Tesla's really weak, another big chunk of it, and a lot of other stuff is mixed. So that looks like that's pretty accurate. And that's why that's useful. You just get a sense of, what's happening. And if you're scalping again and you're looking to short, you don't want to be shorting into a strong uptick like we're getting right now, because you're going to get caught in a short squeeze if you do that. And we just saw that. As I said that, the NQ went from 0 up to 7 here. And so that's a classic example of, the internals can be useful just to keep you from making a silly mistake. And then there was a short after that. And now look, the tick is now dropping back to even. So it gives you a very short-term idea. Now, remember, the equities are what we're derived from. But if you think about it, in order to be a derivative of them, we can't get that far apart. Now, we can get pretty extreme because the futures are much more speculative than the equities, but they have to kind of get back in sync sooner or later. And so you'll see that kind of thing get reversed quickly, very frequently. So anyway, next thing up. So the middle thing I watch, as I mentioned a little earlier, I look at the advanced decline, and this is the last couple of days of it. And again, we opened weak and immediately saw some buying energy, but we're still below 0. And this is the advancers minus the decliners based on the difference from yesterday's close to today's open. That's what that is. And likewise, the one below it is the exact same thing for the NASDAQ 100. So right now, 23 is the net of everything up and down in the NASDAQ 100, and it's still negative in the broader market. And if you look at the net change, well, that makes sense because the only one that's strongly up or up really at all is NQ. And so that totally makes sense, and that's totally in sync. And when I see things that aren't in sync, like if the NASDAQ was way up and its advanced decline was really weak and its tick, popped up for a second and then started dropping, that would be a spot I'd be looking for a short because it's out of sync. And so that's how I use that. But again, it's not, buy here, sell here. It's context. Now, the thing that Alfredo asked me about, I run a chart of the VIX, and that's the thing that's green and red here, and the colors are inverted. So this is the NDX, and this is the VIX. So when the VIX is up substantially and it's really divergent from the price, that at the moment is a selling situation. But look what happened as the NASDAQ got bought, which we just looked at. The VIX dropped precipitously, and I have it turn green when it's doing that. That means risk on. People that are buying options as portfolio insurance they were doing it aggressively at the open, and then they immediately went the other way, and they started risk on. So risk off and risk on are VIX concepts that just relate to options hedging. But again, you don't trade off of it, but it gives you a sense of what's going on. And since then, we've kind of been in this back and forth where, the price isn't really going anywhere and we're going back and forth, and that's meaningless. What would be really interesting here is if this got red and started coming up real strongly, like at the rate it went down, and the price turned down. That would tell me that something in the market is making people more risk averse. In other words, they're risk off. And that's often an opportunity to join that energy. And you'll see it in the price, but this gives you another view of it. The thing right below it is just the yellow lines are the opening 15-minute range. The blue is the initial balance. You can see I've got the gap right here plotted on there as well. That's really just a summary of this view, except it's for the cash, and these are the futures. And again, I just have that there so I can see the difference between what's going on in the VIX and the price and where the price is relatively. So basically what we're doing up here, we're consolidating at the high just above the initial balance, but we filled the gap up nicely, right? And that was actually yesterday's gap, but we had one here earlier. It's just really hard to see. And so, that makes sense. We're ebb and flow at the high end of the range, and, it's kind of running out of gas. And if you were looking at the price action, you'd be seeing that exact same thing. See, we're kind of, we made that higher high, and then we made a lower high, and then we kind of just been going back and forth. But what the regression is saying right now is as long as this kind of area down here holds, then we are likely to go back this way. That's what regression is saying right now. It doesn't mean it will happen. If we get down there, we want to watch the traded volume. But assuming that the energy were to reassert itself, regression's saying we could end up all the way up at, 313, and right now we're at 210. And again, it's doing that just by looking at this price action and saying, what's the best fit of that? And how would you project it out if that behavior continued? That's all that's doing. Okay, so that's the answer to your question and a whole lot of questions you didn't ask, Alfredo. Any follow-ups? And I will continue. Wave volume is really useful. And again, Brandon, you obviously have a much deeper understanding of Wyckoff, and that's okay. But for the purposes of what we're doing here, my point is you really just need to look at the very short-term pullbacks. Are they lower or higher in volume? And is that likely to induce a spring in the very, very, very short term? Remember, I'm looking at on it on a 5-second view, because again, as a scalper, all we are concerned with is this: which way are we going right fracking now? Not since the overnight, not since we opened, right now. How is that momentum changing? And what are the extremes of it? That's really all I look at. It's that simple. Okay, a couple more good questions. Do equities move before the futures or vice versa? Neither. Both. Depends. There used to be something, Steve, called program trading. And this is a long time ago, the early 2000s. And big hedge funds used to move the equities by buying or selling a block of equities. Like they go into the NASDAQ and pick the top 5 biggest ones and sell a bunch of those, and then do the opposite in the futures. And then as the equities adjusted back, they'd make money on the futures trade. So it's a chicken and an egg thing. We are a derivative. The futures are a second level derivative. We're a derivative of the cash. The cash is a derivative of the equities. Does one move the other? Yes. How the relationship between them is really dynamic, and it's really, really, really fast. So the only places where that's really useful is when we're at big extremes of the futures, like the ones that I was showing you. Like let's say we're at SD3 or SD4, and the equities, if that was happening and we were up there, let's say this move here in ES and NQ at the open, let's say that continued, and we were, at SD3 and then SD4, and the VWAP is coming up, but not nearly as aggressively. Well, the first thing I would go do is watch the equities and watch the tick. And if the tick wasn't at 1,000 and staying there, I would be getting as short as I could, because that's a non-sustainable move. So that's how you can look at the relationship between the two, but it's not like one pushes the other. They're very, very closely mixed together. And a few years ago, traders literally used to be able to move the one or the other around with a program trade. That went away in the early 2010s when people started writing algorithms for order flow and trades on the bid and the ask. That replaced program trading. And I really don't think that there's it happens, but it's so fast. If there's any real discrepancies, the arbitrage guys jump in and they go away. So I don't really think there's any material way of saying, this one causes that or the other thing. Now, excuse me, having said that, I strongly encourage you to come to one of the Friday Trading the Close sessions. Those are TRG member sessions, but maybe we'll open one of them up one of the Fridays during this class, because often we see a real good opportunity, because remember, the equities close at 4 o'clock Eastern, but the futures trade for another hour. So often the futures traders will get really aggressive with the equities until they close, and then they have to settle their positions up. And then you can really, see more of a chicken and an egg, or more of a less of a chicken and an egg behavior, and you can actually see one driving the other. But that's the only real instance, is right at the close. And like I said, I teach a class every Friday on that for TRG folks. Have I tried Tick Strike? Is that one of those audio things? Like,
that's the other one.
Price squawk, and it's just distracting nonsense. Again, no individual events like that are of any value. Watching, for example, just seeing absorption, like one of those tools would say, absorption at 16. That doesn't mean anything. You got to see what's going on around there. Well, it got bought right below there, and it exhausted right above there. That's what matters. So, in certain markets for really big, giant scalpers, I know people in the bonds like Grady, that sometimes use tools like that, but they're trading for a tick in a really friggin' liquid market that doesn't move a lot at a time. And, then an audio assistant like that might be useful. But I find they're A, distracting, and B, they don't keep up well enough, even on a really fast connection and computer. You got to be running on a virtual private server right at the exchange to really take advantage of that. And, and if you're that good and have good tools, then you really don't need that on a VPS. So that's my opinion. Great question, by the way. Let's see. Okay. Olan, do I use correlation? Absolutely. I've already explained that a couple of times today, but I'm happy to repeat it. We're not correlated at all today. When we're correlated, it's much easier to trade the indexes because they all tend to work together. And, one of the things to understand is that particularly ES and NQ, they have a lot of components that are the same, big tech specifically. And so, look at, obviously the strength right now in S&P is the stuff that's up in the NASDAQ. And the rest of the S&P is pretty quiet or flat with the exception of a couple of consumers. And so I do look at correlation. I look at it in a variety of ways. I'm the most interested when something is oddly uncorrelated. And I'll give you one simple example. About 6 months ago, Goldman Sachs had a bad earnings report, and it was one of the ones that was in the pre-market. And Goldman is in the YM, they're GF. So here I'll show you. And the YM is only 30 instruments. So if Goldman made a big move, CGS is right there, Goldman Sachs. Right here. If that was really, really down, that's what happened from the earnings. Because they had a really bad quarter, Goldman was down like 6 or 7%. And so because of that, the YM was really weak. But everything else, literally everything else in the YM was either flat or up. Like Apple was up that day, Microsoft was up that day, Verizon was up, that Visa, all of them were up. And so that's an example of a perfect correlation to scalp. What I did was I popped open a window with the Goldman Sachs price on it. And it was down a whole bunch and it got sold at the open like you'd expect it to. And then after that subsided, buyers came into Goldman. So what did I do? I ran over and got long the YM. And I had one of the best trades I've had this year. It was a mid 5-figure profit from just that one thing. That was all I was looking at. And so that's one of the reasons I have like a YM dome over here. If I want to trade YM, I can just pop open a trade window for that, just like any of the others that you saw over here a minute ago. And, I could stick it right there and I can trade YM. But when I'm not doing that, I just close it. But that's one of the reasons I do those kinds of things in my big cash accounts. And that's what these are connected to right now. And absolutely, I look at that. That is, but that's how I do it. Today, we're not well correlated, and that's dangerous. So that's one of the reasons I've been looking for shorts in NQ, is because, it's not going to get that far away from the rest of the market by itself today. If it's going to do that, then, you would see a difference in what's going on in NQ, and the weakness in Tesla would have to go away. And the rest of the little red ones would be probably closer to green, and the big tech would probably be a lot greener. But seeing this mix of stuff, I'm much more likely to be looking for shorts at the highs than longs at the low. And that's what I did today, with the exception of that really good long off the open. That was a classic, particularly the break of the 15-minute range. And that's one of my setups. I'll talk about that one when we get to trading and setups. But if you look at the opening, I trade what's called the open 5, which is just the first 5 minutes. And I traded that short today in NQ. And then I didn't do anything until we got right here. And this yellow line is the opening 15 minutes. And often when the 15-minute opening range breaks, whichever direction it breaks in, you'll catch a pretty good run. If there's going to be a gap and go day, it will gap up or down and then break the 15-minute range in that direction. And in this case, we were filling the gap when that happened. So I got long there. It was a really good spot to get long because, when it broke through there, it just had a minor pullback and then it was off to the races, so like that. So that's one of the things I watch. And I mostly watch ES as a clue for that. But when ES and NQ aren't correlated, then that setup kind of goes out the window. Typically this is how correlation works. And again, this is based on 30 years of experience. You can go back and analyze it statistically, and you'll find that it's true. Generally, if the market's rallying, NQ and RTY will lead to the upside because they're the riskier stuff, particularly RTY. If NQ is rallying and RTY is down, I'm looking to short NQ, because if the market really was aggressively buying risk, then those two would both be up. And I've got my pop-up just came up. I have an appointment in just a couple of minutes here. So anyway, so that's what I look for. And, likewise, I want to see ES and YM participating, and they're not. So, YM is flat, RTY is down. So, unless there was some real strength in NQ, which there isn't today, that would kind of be a way I might look to fade it at a good spot. In general, when the market's rallying, NQ and RTY will lead up. And when it's going down, they'll lead down. Good question. It is like a cross correlation audio. I know those things are there. But again, Peter, that's contextual. That doesn't affect me scalping at any given moment. If it's useful to you, more power to you. But I would suggest that as you become a better trader, you'll get rid of those things. Hang on, I got to go, guys. I'll be right back. I have an appointment I have to go to. We're right on. Yeah, it's a much more powerful tool for swing trading. That's absolutely true. But I don't swing trade. I'm a scalper. So everything you're going to hear from me is scalping related. Okay, listen, guys, I've really got to run. Great questions, but we're right on an hour and a half now. And I literally have somebody calling me that's an appointment I need to go to. So if there's any other questions, please ask them in the pit. The recording will be up as fast as we can get it up, and I will look forward to seeing you for our next class on Wednesday. And make sure that you do the homework if you haven't done it already. Okay, I got to roll, JVC. Can you close up?
Yep, no problem.
Thank you.
All good. All right, gang. Have a good rest of your day, and we will see you for the next class. TRG members, we'll see you in the next TRG session tomorrow, I think. Is the next session tomorrow? I believe it should be. Let me just triple check that. Yep. Jeff's Karen feeding of IPs tomorrow. So we'll see you then. Have a good one all.